Right, so picture this. You're sitting at your kitchen table, coffee going cold next to you, scrolling through real estate listings at 11 o'clock at night, and you see a house that looks perfect. 3 bedrooms, decent backyard, good suburb, and the asking price is listed as offers over $850,000. And you think to yourself, is that actually a fair price? Is this suburb going up or going down? Did the last person who owned this house make money or lose it? And most importantly, if you buy it today, what's it going to be worth in 5 years? These are not small questions. These are the questions that could define your financial life for the next decade or longer. And the wild thing is, most Australians go into one of the biggest financial decisions of their lives without properly answering any of them. This video is going to change that. We are going deep on property values, sales history, and market trends across Australia. And by the time this is done, you are going to understand this market in a way that most buyers, sellers, and even some investors simply don't. Let's start with the scale of what we're actually talking about, because the Australian property market is not just big. It is one of the most extraordinary property markets on the face of the planet. The total value of residential real estate in Australia recently surpassed $10 trillion. $10 trillion. That is more than 4 times the size of Australia's entire annual GDP. To put that in global context, Australian residential property is worth more than the stock markets of most countries. The average house price in Sydney, as of recent data, sits above $1 million, making it one of the most expensive cities for property anywhere in the world, competing directly with London, New York, and Hong Kong. Melbourne, Brisbane, Perth, Adelaide. All of these cities have seen extraordinary price growth over the past 2 decades, with some periods of correction, yes, but a long-term trend that has consistently moved in one direction. And understanding why that is and where it's going starts with understanding how property values are actually determined. So what makes a property worth what it's worth? This sounds like a basic question, but the answer is genuinely layered. At its most fundamental level, property value is determined by what someone is willing to pay for it on a given day in a given market. That's it. But what influences what someone is willing to pay? Location is the most powerful factor. And in Australia, location doesn't just mean the suburb, it means proximity to the CBD, access to public transport, school catchment zones, proximity to the beach or national parks, and even which side of a major road you're on. 2 houses on opposite sides of the same street can have meaningfully different values simply because one falls in a better school zone than the other. That might seem extreme, but it is the reality of how the Australian market works. Beyond location, you've got the physical characteristics of the property itself. Land size, house size, number of bedrooms and bathrooms, garage, renovation quality, aspect and natural light, and the condition of the building. Then there are the broader economic factors: interest rates, employment levels, population growth, migration, housing supply, and government policy. All of these forces interact in real time to push prices up or pull them down. And one of the most important things any serious property researcher needs to understand is that these factors don't all move in the same direction at the same time. You can have a city where one suburb is booming while the suburb 5 kilometers away is going absolutely nowhere. That's why understanding sales history and market trends at a hyperlocal level is so critical. Let's talk about sales history, because this is one of the most underused research tools available to Australian property buyers and sellers. Every time a property is sold in Australia, that transaction is recorded. The sale price, the date of sale, the address, all of this becomes part of the public record. And through platforms like CoreLogic, Domain, realestate.com.au, and state-based property valuation authorities like the Valuer General, this data is accessible. What sales history tells you is the actual transaction record of a property, not what someone hoped to get, not what the agent quoted, but what someone actually paid. That distinction matters enormously. Auction clearance rates and listing prices can be manipulated by market sentiment, by agent strategy, and by vendor expectations. But the settled sale price, that's reality. That's the market speaking. When you look at the sales history of a specific property, you can see exactly what it sold for in 2018, in 2014, in 2010, and you can calculate the actual capital growth that property has delivered over time. This is incredibly valuable information. If a property sold for $600,000 in 2015 and is now listed at $1.1 million in 2024, that tells you something very specific about the growth trajectory of that area. It also tells you whether the current vendor is pricing it in line with market trends or whether they're trying to achieve a premium that the market may not support. This kind of analysis is what professional property investors do as a matter of routine. And there's absolutely no reason why everyday buyers and sellers can't do the same thing with the information that's now publicly available. But sales history of individual properties is just one piece of the puzzle. The bigger picture is suburb-level and city-level market trend data, and this is where things get really fascinating, especially given what the Australian property market has been through over the past several years. Think about the trajectory. Pre-pandemic, the market was already elevated by global standards. Then COVID hit in early 2020, and for a brief moment, everyone thought the market was going to crash. The predictions were dire. Some economists were forecasting price falls of 20, 30, even 40%. And then the exact opposite happened. Interest rates were slashed to historic lows, government stimulus flooded the economy, and people who suddenly found themselves working from home started reassessing what they wanted from their living situation. The result was one of the most explosive property booms in Australian history. Between 2020 and 2022, national home values rose by more than 28%. In some regional areas and sea change destinations, prices doubled in less than 2 years. Byron Bay, the Mornington Peninsula, the Sunshine Coast, Margaret River, these places went absolutely stratospheric. And then the Reserve Bank of Australia started raising interest rates. From May 2022, the RBA delivered the most aggressive rate hiking cycle in a generation, raising the cash rate from a historic low of 0.1% to over 4% in just over a year. The conventional wisdom was that this would crush the property market. And prices did fall. Nationally, values dropped around 9% from their peak through late 2022 and into early 2023. Sydney and Melbourne bore the brunt of it. But here's what made Australia's market different from the doom predictions. It bounced back, faster than almost anyone expected. Why? Because the supply of available housing simply couldn't keep pace with demand, particularly demand driven by a surge in international migration as Australia's borders fully reopened. Net overseas migration hit record levels, adding hundreds of thousands of people to Australia's population in a very short period. Those people needed somewhere to live, and because Australia had chronically underbuilt housing relative to its population growth for years, there weren't enough properties to go around. That imbalance between supply and demand is the single most important factor driving Australian property prices today. Now let's talk about where the trends are pointing right now, because this is the conversation that every property owner, buyer, and investor in Australia needs to be having. The rental market has been under extraordinary stress, with vacancy rates in most capital cities sitting at or near record lows. In Perth, Adelaide, and Brisbane particularly, the rental crisis has been severe. Vacancy rates below 1% in some areas, which means competition for available rentals is intense, and rents have been climbing sharply. Rising rents do something important to the property market. They push more people to consider buying rather than continuing to rent, which adds demand pressure to the purchase market even when mortgage rates are high. Perth has been one of the standout stories in the national market. While Sydney and Melbourne have historically dominated conversations about Australian property, Perth spent the better part of a decade going sideways after the end of the mining boom. But from around 2021 onwards, Perth has been on an extraordinary run. Affordability relative to the eastern states, strong employment driven by resources and construction, interstate migration from people priced out of Sydney and Melbourne, and a genuine undersupply of housing have all combined to make Perth one of the best performing major property markets in the country. Suburb after suburb in Perth has posted double-digit annual growth, and the city has gone from being seen as the affordable alternative to being recognized as a genuine growth market in its own right. Brisbane is another city that has captured enormous attention, partly because of the upcoming 2032 Olympic Games. Major infrastructure investment tied to the Olympics has accelerated development across southeast Queensland, with significant projects in public transport, sporting venues, and urban renewal creating ripple effects across the property market. Suburbs that were previously considered fringe locations are now being repositioned as future inner-city areas, and early buyers in those pockets are already sitting on strong gains. The Palaszczuk and Crisafulli government's infrastructure spending has functioned almost like a decade-long advertisement for Brisbane as a place to invest, and the property market has responded accordingly. Understanding all of this, the suburb-level trends, the city-level dynamics, the national economic forces, requires access to good data. And in Australia, the tools available for market research have never been better. CoreLogic's Home Value Index is the most widely cited measure of national property price movements. Domain and realestate.com.au both publish extensive suburb-level data on median prices, days on market, vendor discounting rates, and auction clearance rates. The Australian Bureau of Statistics publishes quarterly residential property price indexes for the 8 capital cities. PropTrack, the research arm of REA Group, produces detailed reports on buyer demand and listing volumes, and state revenue offices publish detailed property sales data that can be downloaded and analyzed. What you're looking for when you study market trends is not just what prices are doing right now, it's the leading indicators that tell you where prices are heading. Auction clearance rates are one of the best real-time indicators of market sentiment. When clearance rates in Sydney and Melbourne are consistently above 70%, it means demand is strong and vendors have the upper hand. When they fall below 60%, the market is softening and buyers gain more negotiating power. Days on market tells you how quickly properties are moving. A falling days on market figure is a classic early signal of a tightening market. Listing volumes matter too, because low listing volumes combined with strong buyer demand is the perfect recipe for price acceleration. And then there are the macro signals: Reserve Bank decisions on interest rates, federal government housing policy, state government stamp duty and first home buyer incentives, and migration data from the Department of Home Affairs. All of these feed into the property equation. The Australian property market is not a single market. It is dozens of interconnected markets, each responding slightly differently to the same economic forces. Being able to read those forces and understand their likely impact on specific locations is what separates a confident, informed property decision from a guess. The truth about Australian property is this: it has created extraordinary wealth for millions of people who owned it at the right time, in the right places, with the right strategy. It has also caused genuine financial hardship for people who bought at peaks, in poor locations, or without understanding what the data was telling them. The market doesn't care about your hopes or your expectations. It responds to supply, demand, economic conditions, and sentiment. Your job as a buyer, seller, or investor is to understand those forces as clearly as possible and make decisions based on evidence rather than emotion. The data is out there. The tools exist. The research has never been more accessible. And now, so is the knowledge to interpret it. So go and do the work, dig into the numbers, study the trends, pull the sales history, and make the most informed property decision you possibly can. If this video gave you something valuable today, drop a like, share it with someone who's thinking about buying or selling, and hit subscribe, because this is just the beginning of what we're covering on this channel.